In this video, we're going to talk about various credit scores that are needed for each type of loan program. I'm going to give you the minimum credit scores required, and then I'm going to tell you what normally we see in the industry with these engines. Because what happens is in most of these types of loans, there is an AUS system, an automated underwriting system. It's like a computer-generated AI system that spits out an approval or denial based on your credit score, credit profile, work history, amount of money that you have in the bank, and income. So reality is they say that they can lend you money based on the lowest credit score of 580, let's say, but in reality, it's really difficult to get an approval. So I thought it'd be helpful to share with you what are the minimum credit score requirements, and then after 24 years in the industry, what I see as a needed credit score and why. Let's get started. All right, so the first loan type is a conventional loan. Minimum credit score required is a 620 credit score, 620 mortgage credit score. Not necessarily a FICO score, consumer credit score. I have tons of videos about that, so I don't want to take time to explain the difference in scoring. But from a mortgage lender, 620 score. However, if you're putting 5, 10, 15, or 20% down and you have a 620 credit score, the probability that you're going to get an approval is very low. And if you do get an approval at, say, a 620 or 640 credit score, you're going to have really incredibly high interest rates and PMI insurance. So I find that the optimal credit score to go conventional is a 680 credit score. Sometimes a 660 if you're a lower income borrower, if you have lower income, because there's some specialty programs. But in general, a 680 credit score is a good threshold for conventional financing because it reduces your interest rate and reduces your PMI insurance. Hope that makes sense. The second loan type, it'll make more sense when I talk about this next loan type, is FHA loans, a Federal Housing Administration loan backed by the federal government. The minimum credit score required is a 580. The down payment requirement on an FHA loan is 3.5% down. But if you have a 580 credit score and you're putting 3.5% down, the likelihood of you getting an approved eligible through the automated system is very slim. So what do you need? You either need more money down or you need a higher credit score. I find that a good threshold for credit scores with an FHA loan is a 620 credit score. And so where conventional, you can barely get into the game at 620, FHA, you get an approval at usually 620, for sure 640, and the interest rates are good. And the mortgage insurance is the same, no matter if your credit score is 620 or if it's 780. So 620 I find is a good threshold for an FHA loan to find that you can get an approved eligible with minimum down, and a 640 gives you a better interest rate. Understand? Making sense? The next loan type is VA loans. A VA loan, yeah, absolutely. There's technically no credit score requirement. 580, 600, 620, 640, any of those are supposedly allowable. The problem is I can't get an approved eligible unless I see around a 620 score, preferably a 640 credit score. So unless you have extra money to put down, we're talking 10, 15, or 20% on a VA loan, you may not see an approval through the automated system with credit scores under 600. And then there's a USDA loan. Rural development is for those who want to buy in more rural areas. Same thing, very similar to FHA and veteran loans, where the minimum credit score is 620, and I typically see approvals really closer to the 640 range because it is a type of zero down loan. And then finally, there's those jumbo loans, those big loans for people that are buying homes that are above $800,000 to $1 million plus. And those credit score requirements usually are around 700 because they're more private investors. There are different ways that you can get into loans with lower credit scores down to 500 or 550, 580. And that's with having more down payment money, maybe looking at what's called non-QM loans, which are non-qualified mortgages where you pay a higher interest rate. You may not even pay PMI insurance, but you offset it with a higher interest rate. Some people say getting a cosigner is a good option as well, although I find that a cosigner doesn't replace poor credit. It really helps those borrowers who have low income to help them get into the house that they're looking for. So I hope that helps you understanding credit scores and the modules that go with the approvals through AI and automatic underwriting systems. And so there's this minimum credit score of 620, but if you can't get an approval, what good is it? So I hope this helps. This is Dawn Connors at Mortgage One, providing you fantastic mortgage solutions. And if you have more questions about it, just reach out to me and I'm willing to help and to work on your specific situation to get you approved. Thank you.